Hello everyone, my name is Kue. Let's look about the topic for today's video, which we're going to be looking at housing and buying or renting a place to live. So, buying and renting a place to live is a big deal because it impacts our daily lives and our future. Both buying a home and renting an apartment have their own progress, advantages, and disadvantages, and we're going to be looking through them for the video for today. So, home buying versus renting. To rent or to buy is a common question, and the answer really depends on your personal situation, financial ability, and lifestyle preferences. When you buy a home, you're making a long term commitment. You get a mortgage loan from a bank or other lenders would help you pay for the property over time. Each payments you make helps build your equity in the house, the part of the home you truly own. While this progress seems daunting, it also provides opportunities like the chance to make a place really your own, an investment in the future, and a possibility to grow your wealth. On the other hand, renting involves a signing up a landlord for a specific period. This is usually a year, but it can be shorter or longer. In this case, you're not building equity or investing in property, but you get flexibility and less responsibility for maintenance. You pay a fixed amount each month and cannot whether your lease term is enough. While you cannot make as many changes to your home, you're also free from worries about market changes affecting home prices or taking care of property tax and major repairs. Just like how owning a home can increase your wealth and if the home's value just goes up over time, renting allows you to invest the money you are not spending on repairs and taxes, giving you another chance to build your wealth. So there's a lot of upfront and ongoing cost. But when buying a home, you encounter some immediate expenses such as clothing costs, inspection fees, and a down payment. Others ongoing expenses include the yearly property taxes, homeowner insurance, and mortgage repayments. So all you also need are consider maintenance and repair costs. These can roughly about 1% to 3% of your home's value each year. Buying a home can be a solid investment. You can build equity, which is the percentage of your home that you actually own. Over time, as you pay off your loan, your equity grows. There's also the potential appreciation or increase in your home's value in the future. So this could be a plus if you plan to sell your home one day. One more benefit of home ownership is that you get to call the shots in your home. You can decorate, remodel, or renovate whenever you are. So the big disadvantage are it's also important to note that make sure your home stays in a good shape and can be time consuming and costly. You alone are responsible for paying for all maintenance and repairs from yard upkeep to roof replacement. Now let's take a closer look at the cost, advantages, and disadvantage of renting a home. So usually renting offer has fewer upfront costs than buying. Usually all that's required upfront is an application fee, security deposit, and first month rent. Advantages could be you can move location with ease, and let's not forget the lack of maintenance responsibilities. Your landlord is typically responsible for repairs and maintenance, not you. Some disadvantages could be the downside of renting is that you're paying someone else's mortgage. That means you're not building equity. You also lose a bit of personal autonomy when renting. You're limited in the changes you can make in your living space, and there's the possibility of rent increase and having to deal with difficult landlords. So making the choice, buying or renting. So it's actually a pretty hard choice. Buy a home for stability or rent a home for lower upfront costs and reduce maintaining responsibilities. So it's basically just to your preference, and your decision should also take into account of your current financial status. And there's no one size fits all answers to the renting or buying question. The best choice depends on you after all. So let's look at the advantage and disadvantages of the things that we need to consider when renting a home or when buying a home. So when buying requirements, there's a lot of them. First is budgeting and importance of credit score. First, you need to figure out how much you can afford to spend on a house. A quick rule is to follow the 30% recommendation, and it means you shouldn't spend more than 30% of your monthly income on housing costs. So if you earn $5,000 a month, you should try not to spend no more than $1,500 each month. Well, good credit score is another key part of home buying because it can affect what kind of loans you get, the higher interest you have to pay. If your credit score is high, lender will see you as less risky and you often get better loan terms. If your credit score is low, it may be better to wait until it improves before starting to look for a new home. So once you've already start looking at homes, it's a wise idea to get pre-approved for a mortgage. Well, this process involves proving a bank or leader or lender with a snapshot of your financial situation, and after reviewing your income, savings, credit report, etc., the lender can tell of the mortgage amount for which you qualify. So that's basically a really important thing. So before you move in, it's important to look at all the costs to be required to pay before you actually get the keys to the house. So let's talk about your down payment. The down payment is the upfront amount you pay towards your home. The amount can be based on many factors during your credit score, the type of mortgage loan, and the lender's policies. Traditionally, a down payment of 20% was standard, like a $40,000 down payment for a $200,000 required down payment as low as 3% or 5% for conventional loans. So closing costs could be really expensive. Closing costs are the various fees you pay when getting your home loans and finalizing the home buying process. These costs can be verified based on the type of property you're purchasing, where it's located, and what type of loan you choose. So after you move in, your bank or lender will require that you buy homeowner's insurance. Well, this insurance pays for damages to your home and can provide liability coverage against incidents in the home or in the property. So if you're buying different kinds of property within a housing development, you might need to pay homeowner associations, which is HOA fees. Well, these fees cost the upkeep of common areas, and if your neighborhood has a pool, walking trails, or nice playground, your HOA fee is what pays for them. So finally, remember to budget for yearly property taxes. Your property tax amount is determined by your local government and it's usually based on the value of your property. So typically, your bank lenders or etc. can roll all these costs together and add them to your mortgage payment. So this service is called escrow. So remember, buying a home is a big life event, but it doesn't have to be scary. You can keep things simple by working out your budget, save for a down payment, and remember the extra cost of insurance and fee. Good luck. So after this video, I think that we've all have a look at what are they and how do we actually look at different situations when we're buying or renting a place so that we could live for our life. So I hope this video really did provide valuable insights to you and hope it helps. So thank you so much for listening to my video about buying and renting a house and owning a house. So I hope this video really did help. Thank you so much for listening and goodbye. See you in the next video.